All right, a financial report made 9 big calls for the week. Let's see what happened. So, 9 predictions in just 1 week. The big question, how do they actually do? The strategy was pretty balanced. 3 buys, 3 sells, and 3 holds, right down the middle. Okay, let's start with the big winners, the bearish calls. They were totally spot on. That sell call on Tesla, a definite hit. The stock tanked 8% for the week. And those crypto shorts, they paid off big time, with both dropping around 10%. Apple was the one winning buy call. And yeah, holding Google and Nvidia was the right move. But, it wasn't all wins. The bullish bets really struggled this week. Yeah, the buy calls on Amazon and Meta, total misses. Both stocks actually dropped. And holding Microsoft meant they missed out on a pretty solid 2.5% gain. So what's the real story here? Because there are 2 totally different ways to look at success. First, you've got directional accuracy. Basically, was the big picture idea for the week correct? And second, was the timing good enough for a clean, profitable trade? 1R profit. And that's the key difference, right? The big idea versus actually making money on the trade. Think about it. The crypto calls were right, but an early bounce would have stopped you out. And this chart just says it all. The report's big ideas, they were right 67% of the time. But when it comes to timing for a clean profit, only 1/3 of them worked out. So here's the final scorecard. You can see every call and how both metrics played out. The key takeaway? Skepticism paid off big time. Optimism was just a little too early. So it leaves you with a big question. Which one matters more, being right or being profitable?